If you want to actually build a sustainable investment portfolio, you need to pay attention. And this is what I've seen over time. A lot of people just invest because somebody told them it's good to invest in real estate, told them it's good to invest in bonds, and then maybe sometimes down the line, they heard somebody talking about land in where they buy. And that is the basis for their investment. That is quite wrong. Hi, my name is Olufemi Sheyi. I'm a real estate salesman. I buy, build, and sell real estate for profit, both for myself and investors. Welcome to another episode of Fireside Conversation. Today, I'm going to be discussing a very interesting topic. Interesting because quite a lot of people have asked me, and then important because if you're listening to me today and you want to actually build a sustainable investment portfolio, you need to pay attention. And this is what I've seen over time. A lot of people just invest because somebody told them it's good to invest in real estate, told them it's good to invest in bond, told them it's good to invest in treasury bill, and then they do that. And then maybe sometimes down the line they were in the bus and then they heard somebody talking about land in where they buy, land in Moe they buy. And that is the basis for their investment. That is quite wrong. So what are those 5 things that you need to understand before I go into the meat of the matter? Number 1, you need to understand the goal of your investment. What exactly are you looking at? Are you trying to just build net worth? You are saying, look, what I want now is I want to buy assets that would appreciate. And then in 5 years, the asset I put in 1 million will be 5 million. If I can do 10 of this, that means I'll be worth 50 million. Or you want to say that what I want right now is I want something that can generate cash flow for me because based on my need. And then, so you look at instruments that can continue to pay you. You're looking at dividend stock, you're looking at fixed income instruments, you're looking at even mutual fund that distributes dividend. Those are some of those things you can even, it depends on what your goal is. You need to first of all decide what exactly do I want to do and over how many period. I want to actually build 500,000 naira cash flow every month from my portfolio. That is my 5-year goal. If I target, that means 6 million in a year. What it means, I'll say if I can do 15% return on my portfolio, that will give me 6 million. So what portfolio do I need to have that will give me 6 million? So you can walk back and say, okay, if I have 60 million, or if I add 40 million at 15%, that will give me the 6 million. So the next question would have, now that you've identified your goal in 5 years to say, look, I want to be having 500,000 every month. You now walk back and say, now I need to have 40 million naira portfolio that would generate that cash flow. So you say, since this cash flow, what are those instruments I can put into my bucket that will continue to generate 6 million every month? So you are saying, okay, I want to do federal government bond, for example, that pays me 15%. I have 5 million today, I put in 5 million, and then every month I start putting in to make sure I'm compounding that particular investment to make sure that in 5 years, I would have 40 million that will continue to generate 15% for the next 10, 20 years, depending on what the goal is. So you can see how understanding the goal helps you to determine the instrument. If you say, look, I don't need the cash flow, I'm still very young, I'm just 19 or 20, I want to just make sure that by the time I'm 25 or 30, I want to be worth 50 million. So what can I put my money in that is not necessarily generating cash flow, but that is compounding and multiplying that would give me 50 million net worth? So you want to say, okay, good. I'm going to go buy a land that is selling right now at 3 million or 2 million in Ekpe or in Moe and in all those ones. And then I'm going to keep buying more plots. And then I know that based on my projection, the value of my investment will be worth about 50 million in 10 years. So you can see that understanding the goal, first of all, is the number 1 strategy you need to do. So what are those other things? There are 4 things you need to take into consideration. I already mentioned them anyway. Your age, depending on what age. If you are young, you know that you have a lot more runway. You want to actually take your time, look at what will build your net worth as an individual, and then you know that you are still working actively, you still have strength, you still have vigor, you're not close to retirement. So you can always work to generate cash flow. So you don't need those investments to be giving you cash flow. You just want to build it up so that at certain point, you know that you've crossed the 100 million naira mark. So age determines. But if you're a bit older, maybe you're in your 40s, you have a family, you have obligations, you know that cash flow and a bit of capital appreciation or planning for your retirement is part of what your goal is. So you're looking at an instrument that can both give you cash and can also multiply and can also grow. But if you're near retirement, you're 60, you're 70, you're looking at, you know what, I just want a comfortable lifestyle. I want to be able to sustain my life. So you're looking at assets that will just give you the cash flow without risk, because if you're 65, 70, you don't want to have to go back to the work environment. So what is the safest instrument I can put into my bucket that will continue to give me? So you say, okay, what I would do is just put all my gratuity, put all my pension inside federal government bond, a 30-year bond that will continue to pay me 15%. So I got want 50 million from all these things and put it inside. My pension is also there. Or maybe your 50s, you say, I want to do an annuity over the next 10 years that will pay me for the next 15 to 20 years. Those are the ways that your goal actually would translate into the asset you're going to invest in. So your age and then how long you want to hold it. Sometimes we make a mistake. You have a very short time horizon and then you go invest in land. Land might take a while to appreciate. You might not be able to sell it. It's not liquid. You might not be able to sell it as you need it. So if you have 6 months, you don't want to lock it up in land. You want to lock it up in fixed deposits that can continue to pay on a monthly basis. You can see how the timeline that you have affects what you're going to put your money on. And then risk. Your risk tolerance is also very important. A lot of people miss that. I see a lot of people who are risk averse. They don't like risk at all. But somebody tells them that people are investing in crypto, they're investing in Forex, and they're getting 10% every month. And then they put their money in. And then they keep watching the Nigerian Stock Exchange every time. Your heart rate goes up when the all-share index goes down. And then your heart rate moderates once the all-share index goes down. And then sometimes you just realize that, this investment of 1 million that I did is now 700,000. You are not able to sleep. Because you're unable to sleep, your decision-making process is a bit warped, and then you just wake up one day and say, you know what, call your broker and say, sell everything for me. That is somebody who's not risk averse. If you're risk averse, you say, look, you know what, I'm going to leave it there. Let's see what happens over the next 2 years. What if I lose the entire value? It's possible. But what if I don't lose it? That person is a bit more risk embracing and then can invest in those risk instruments. We're going to touch on some of those instruments that fall into the category of risk in the course of this conversation. And then the last point that you have is your knowledge. This is the most important investment you need to have. If you want to invest in anything, your first investment should be in yourself and understanding the subject matter before you even invest in it. Take time out. A lot of resources are free. Go read about it. Go sit with an expert. Pay an expert for lunch. Pay for consultation. Get to know what you want to invest in. Understand the risk, understand the reward, and then you do that. That is the most important asset that a lot of us ignore. And I find it very amusing and quite amazing that you work from 8 to 5 every day of your life, and then you take a whole 30 to sometimes 180 days of your life, to what you work hard for, and you give it to the hand of somebody and say, if they ask you that, do you know about this? And say, no, but I've given it to my brother, I've given it to my cousin. I know people who have spent millions buying land that they've not gone there once or twice. They don't even have an idea of that. So you need to actually know that you have to invest time and other resource in knowledge before you actually start on your investment journey. So I've covered all the goals. Let's look at it. We're going to use an analogy to describe what your investment portfolio should look like. It should look like a house, right? Let me take you to the slide. It should look like a house. This is what an investment portfolio should look like. There are 3 levels to a house. The first one here. Now at the base or wherever you are is the foundation, and that is security. If you are building a house, if your foundation is faulty, then that house is going to come down. You know, that's why even the scripture says, if the foundation be faulty, what can even the righteous do? What can you do? There's nothing you can do, really. So you decide, I want to start my investment journey. It's like a house. It's like I want to build a house. What should be in my foundation? Those are instruments that are secured, guaranteed, that you know that relatively, even if there's problem, you can guarantee that you are most likely going to get your return. What are those instruments that fall into this category? So these instruments, for example, are fixed income instrument, fixed deposit, bond, federal government bond, treasury bills, commercial papers, even I'll put your annuity in this bucket. You know that once you put your money in this instrument, I'll still take us to the risk profile after this one. You know that your money will remain the same. You put in $1 million in federal government bonds, you still have your $1 million over the next 10 years. And every year they pay you 15%, which is about 150,000. Every 6 months, that's 75,000. Nothing can happen to that cash. If you put your money in the bank, yeah, banks do collapse, but it's rare and far in between. And most big banks will be rescued by CBN anyways. If you are building a portfolio, you're a young person, you want to actually stratify and say, look, I want to put my cash, I have 100 naira here. I want to put at the beginning, when you just start your investment journey, you want to put like 50 to 60%. Remember, you need to have a goal. I want cash flow of 5 million every year from, guaranteed. So, and I know that I can get 10%. So you want to put 30 million or 40 million here. You want to make sure that you start putting cash into this bucket until you get to a certain level. You can decide, I want to do it concurrently. So you take your 100 naira, start with this one and put 50% of it here until you get to your target goal, and then you put 40% here, until you get to your target goal and put your 10%. But if I were to advise, if you're starting out here and you don't have that kind of huge cash, to put into this kind of bucket, you put everything here until you hit your target, your cash flow target. And then the next thing is you move it here. The growth one is, that, look, I can embrace a bit of risk, but I also want a bit of, so I want a bit of growth apart from cash flow. And I still want a bit of security. And now what will fall into growth? There are instruments that they can provide you cash flow, they are relatively secure, and they can appreciate in value. What are those things you put into this one? This is where real estate will fall into, for example. Real estate will fall into this place, and then equities. Equities will fall into this place because they can appreciate in value. And then also some other instrument, I think, commodities can actually fall into this category for those who invest and hold, but I will not add this to, but real estate and equity fit perfectly. What do you put in this one? Private equity investment, forex investment. For those who like gambling a bit, you could say, I want to actually hold cryptocurrency in this one. And private equity, investing in startup business, private equity will fall into this category. You can invest 5 million and make 500 million in private equity, but you can invest 5 million for the next 10 years and you lose everything. But one big hit can actually compensate for all you do. So you can see this is the nature, this is what your portfolio should look like. The last element I would look at, you need to understand what your risk profile is. There are a number of tools online that allows you to do your risk assessment. You need to get it done. Understand where you fall in the risk spectrum. Let's look at a chart that we have here. So now, if you look at it, this is cash flow in blue, this is your risk profile in red. Now, if you look at, this is age and this is scale or tenor. Now, if you look at this, the older you get, the less the risk you should take, the less the risk you should take, because you can't afford, if you're 18 or 20 or 21, you can actually invest 10 million in an asset, lose everything, and still become a billionaire easily, because you know that you have time, and you have the energy, you have what it takes to actually rebuild. But if you're 75 and then you put in 1 billion in a particular instrument and you lose it all, it might be a bit more difficult. So your cash flow ideally should go this way. The older you get, you should structure your portfolio so that your cash flow increase to help you to meet the demands of your life. So what are those instruments and which spectrum do they fall into? If you're looking at low risk, you are more interested in cash flow, this is where you should be. If you want to take a bit of, you don't want too much risk, you want some element of capital appreciation and cash flow, this is where you want to actually be. Real estate, you want to put it on equity, particularly established dividend paying stock that is well run, that you have a track record over a period of time. And then if you like, I want to take a bit more risk. I want to quickly grow and scale this thing. You want to actually go to your forex, private equity, crypto, and so on and so forth. And then if you want to just I want to build equity, I want to grow in net worth and but I want minimal risk. I don't want to do this that can shoot up and come down. You want to do equity, you want to do a bit of stock, particularly established dividend stock, you want to do real estate, you want to do commodities. So those are some of the ways you can actually craft a portfolio that is resilient, that will stand the test of time, that you can control and manage. One of the things you would notice about investment funds that are professionally managed, they have a portfolio guide, which means that you can put this asset in this ratio. Once one asset grows in value suddenly, they'll sell off to rebalance the portfolio. That is because they understand that this principle is what will make sure that you don't run the risk of losing everything you've invested in. I hope this has been of value to you. If you still want to know more, I need you to do me a favor. I need you to follow us across our social media pages. I need you to just go subscribe to our YouTube channel. This will be of value to you. And also beyond that, it will also encourage me and it will encourage the team behind the camera that have put in so much to get this to life. So thank you for being part of this episode. I look forward to speaking with you again next episode when I'm going to be bringing interesting topics. If you have questions, please kindly ask in the comment section and then we'll look at it, answer there, and bring some of the solutions to the screen so you can notice. Thank you. Have a wonderful day today.